All right, good evening, guys. It's Ken at Tortoise Capital. It's the Sunday Night Strategy podcast for August 9th, 2020. I want to start with a review of a monthly check-in from Ken Hum. This is his write-ups and his monthly after-action review. Let's see here. We start with... Yeah. All right, I'm liking that Ken has been improving his accountability by posting more charts in Campfire, and he's noticing that improvement by learning by doing. He's shifted from Owl, Emerging Dragon, and Collapsing Dragon to more of the earlier entries of supported spring, fall, and winter crossings. And then he's preferring the SFC SFC combination to go long, and then just simply using inverse ETFs to capture the downward trends, and instead of also flipping to do the winter crossing, and that way everything is up and to the right, and so that makes good sense. The Wu Wei exit is really helping him by getting the best of both the sniper and the manager. He's working on adding positions at key points, and then identifying key moments like failure to fail. That's where you have a leg down and it comes into a doji or a support level and then fails to fail further. And then that becomes the beginnings of a supported spring crossing, for example. And then the resumption of the trend, which is where you have leg one, pause, and then leg two starts off in the same direction. So that's crucial. And then the third critical state or key point is the going beyond resistance levels. So when you've mapped out those points, then really you get three things that are happening, which I think are worth a quick sketch. So the first one is a sell-off that now comes into a, call it a hesitation zone, a support level. And then instead of this thing breaking down further, the fact that it goes sideways says this is a failure to fail. Like this is the place where you are entitled to believe that it should continue to fail, but it doesn't. And so that could lead to supported spring crossing now, where you have it crosses the baby dragon and then upward it goes into the supported spring. So that first idea was failure to fail. The second one is a resumption of the trend. And that's in this case where out of that consolidation area, you get this leg. And so now what you have is something like leg one, and then out of this area, you get a resumption, and that's going to be leg two. Then you might have another consolidation area, and then you would see leg three. So each of these consolidation areas has that same feature. You have failure to fail, and then you wonder, well, what's it going to do in here? What's it going to do? And then in terms of the size of those moves, we're always templating that they're going to be approximately the same. Because in any symbol that's in play, you have a certain amount of buyers and sellers that have a certain amount of resources that they're going to commit to that fight. And then in this particular fight, where you have selling pressure pushing this down, and buying pressure trying to resist it. Well, in this case, the buying pressure is greater. So it's the same market participants. And then as a result of this, this little consolidation zone, well, you still have the same number of sellers. Well, they're happy because that first leg down was a reward to them. And so if no new buyers come in, then as soon as those selling actors get a little greedier, then you're going to see leg two, and it's going to be the same relative strength until such time as maybe at the second one, you now see more buyers coming in which case it would not fail to leg three. It would get flat instead. And then maybe that's the one where it starts to go back up. And then the third idea was, as a key state, was going beyond resistance. So each of these areas represents a decision point. Is it going to go, this way or that way or reverse up? What's it going to do? So in the case of beyond resistance, we had some sell-off. Winter became spring. Spring became summer. And up this thing goes. And then when we looked at the previous trading range may have been something like this. And then you project across here and you say, this is where all that resistance happened. That the last time that it was going up, it got that high and then rolled over and then became the fall and then became the winter. And now you've got this trading range built in of support and resistance. And so as this price is moving north towards here, see what's it going to do at that resistance? If it can get beyond that resistance, beyond resistance, then that's a good thing. 2 pluses for that. And so that becomes a place where all three of these are really places where you have decisions being made after some period of price action. And it's a new question. How is it going to be resolved? In each case, so in the first case, you had leg one down. It finds some level of resistance, and if it fails further, then it might just be a rebound point, and that's going to lead us to the SSC and the OWL and the ED. And then the second one is you have downward selling, comes into that resistance area, and then it votes downward. And this is going to lead you to things like the collapsing dragon, the supported winter crossing, and things like that. That's a continuation. It was down, now it's down 2 legs, and maybe it goes down 3 legs. But that represents a decision point in that first consolidation. And then finally, the beyond resistance is when you framed out those key price levels using the multi-time frame, multi-lens analysis, where we're looking at things like MACD, 4 seasons, regression line fractal framework, regression line crossover, support and resistance. And then you've mapped out those key levels of support and resistance in here. And then if it gets beyond here, well, this is a new leg. And now you have to project this up to where's the next resistance. So as we're starting to map out, our yellow zone, and we're figuring out where we want our little mechanical entry and our mechanical stop, we're looking at reasonable target levels, and we're mapping out places where there might be support and resistance. Now suddenly these areas where it wouldn't surprise us if it failed, but it doesn't, then these become areas in which you can say, hey, all of this tension was resolved to the upside. So this is where you want to be mapping out places to add positions. So he's done a nice job of laying that out for us. He is increasing his span of control gradually, going from one trade on IWM with 1 minute bars paper trading up to four simultaneous trades with $100 of risk capital per. But the performance is starting to suffer, and so that may just be stretching too far too fast. So I'm going to say, okay, back off a little bit. So one of the ways that you get better at this is by pushing to find the limits of maximum sustainable rate of growth. So if his learning curve or his span of control curve looks like this, up, tried too much, then back. Yeah, every time that you try to stretch, you might get some gains and try to stretch a little more, but then there's a point beyond which, hey, I couldn't quite go that far, and so you just learn by doing. Whoops, how much you can add to it. Until the performance starts to suffer. And then as long as, just like when we're trading price, as long as I've got higher lows, then I can say I've got something like some kind of upward trajectory. Now, whether this is the same kind of curve management when it comes to equity, system quality number, expectancy, learning rate, span of control. All of these things are evidence of management. So as long as we can have some kind of controlled curve in here, we have some band of excellence, and as long as our net curve is good, we can experiment. We don't get overconfident when we have periods of outperformance, in the same way that we don't get too discouraged when we have periods of underperformance, as long as that's within kind of normal parameters, and it'll tend to equalize over time. And so that's why you need to have enough data points in order to be able to actually manage a skill-based process. And that's what he's doing right now, is learning how to go from paper trading to live trading, adding more symbols. He added some complexity by trying some other patterns. He added to his simplicity, or he reduced the complexity. He created simplicity with the Wu Wei exit as a standard way to manage all the trades, and then to limit everything to the supported spring crossing, so that instead of learning how to manage patterns in both directions, he just flips and plays the inverse. So everything is up and to the right, and he has the same kind of mental habits, the same pattern recognition. And so what we're looking for is the maximum sustainable rate of improvement in a controlled system. If it's not a controlled system, then you have wild fluctuations in your performance, and you never really know what's the contributor to that, or if it's repetitive, if it can be repeated. A controlled system has somewhat tight performance curves in different time frames and different environmental conditions, and then you could say you have a system that's under control. And that's what we're trying to get to, is maximum sustained rate of improvement in a controlled system. And that means you have to have standard, reliable work, stable processes, so that you can experiment one variable at a time to see what the net effect is going to be. And that's what Ken's in the middle of doing right now. So good job. Pleased to see he's working with Glenn and Worth in a discussion group. He's working on automating these supported spring crossing. That's a good idea, because when you code things, it forces you to be very explicit about what it is that you want to do. He's completed the coding of his initial stop to no lose plus dinner for two. That's good. And now he's working on how to, he stops trading in the SQC and then waits for the Z3 pinch to get there. And he's got to figure out how to regulate his robot trade to do that. And he's learning the Quant Connect framework in Python in order to automate his processes. I hear a lot of good things about Python. Continuing to work on standardizing his work processes, and committing to continuous study. Learning to improve the day job at home while also trading. So that's a span of control issue, and finding balance. And that's why finding the essential few things and relentlessly simplifying is crucial. And then the span of control when you have different cognitive tasks. Like if I have 4 open trades and they're all moving up and I'm just moving stops, that's one way I can get 4 simultaneous decisions underway. But if you're stalking something and managing an exit here and entering there, and you've got significantly different cognitive tasks, you may find that to be more complex than, instead of doing 4 of the same things, trying to do 4 unique things. You may just find that you have to scale that back a little bit. Working on improving the trading log and histogram and automating it. That's good. That is going to help this kind of analysis that you're doing. Getting to zero state quickly. That's a psychological process, and that's trainable. And I'm thinking of doing a couple lessons on visualization this week to help with that. Forgiveness and gratitude. It really does matter with yourself. And again, think of the lesson about if you were giving somebody else advice that was working hard and then had a setback, and it was just part of the normal course of event of the learning process. You wouldn't beat them up about it. So give yourself the same kind of rigorous loving kindness that you give to others. And then better feeding and caring for yourself. That's the physical plant. You've got to take care of the infrastructure. I am really fond of this darn rowing machine. I just got a little rowing machine by Sunny, Sunny, and it was about $200. Has magnetic resistance in 8 different settings, and it assembled easily. It was $200 delivered, and I wanted to see if I really enjoyed it and how it would feel on my back and overall body fitness before I dropped a lot of money on like a Concept 2 professionals level rower. I'm really enjoying it. I don't know if I need a Concept 2 rower. Maybe in the future it'll be there after 6 months of rowing. But boy, talk about a zero impact total body combination of cardio and muscle building. Wow, boy, do I really like that thing. And it actually is improving my back and knees because I'm getting some exercise, but with no impact, and I can control the resistance level. So I'm really happy with that. Some challenges and opportunities. He's identified the things really. Span of control, focus, and attention. Probably ramped up too quickly to the current level of 60 plus. Yeah, I think you ought to have about 8 to 10, and maybe 2 trades instead of 4. Any questions? Do I push through until I get the hang of it, or do I scale back? I sort of like this idea. When I was trying to reduce the time period that I was working on, I did something like this. Like I wanted to get to 1 minute charts, and I was trading on 5 minute charts. And when I went to 1 minute charts, it was way too fast. But then I went to after I tried it on 1 minute charts with small position size, and then I scaled back to a 3 minute chart, and that seems supremely easy compared to a 1 minute chart. And so by stretching for a 1, I was able to go from 5 to 3. And then I started going to tick charts, and then I was able to throttle back to 1 minute charts. And now 1 minute charts feel easy and natural. So this kind of tacking back and forth, like 2 steps, like 2 steps forward and 1 step back, 2 step forward, 1 step back. That might be a way that you can stretch and take advantage of the adaptability of our mind and attention span and everything. In the same way that you learn that you can listen to videos at 1.25 or 1.5 playback speed and not lose any content. That's might be a way for you to take a look at that. And then I would also think like probably 10 symbols and 3 patterns is enough. I don't think you got to be at 60. I don't use 60. Chasing, I would say something like this. Don't chase beyond Z2. Part of chasing is you gotta take a look at the root cause, and that is look at the timing on your alert system. It feels like we're chasing. You think to yourself, hey, I feel like I'm chasing. Why? Because the amount of time between the alert and the recognition is taking, by the time I can recognize it, it feels like it's too late. So what you got to do is move your alert back a little further so that you have some time to be able to come in and make a decision. Do I take it or do I not take it? So if you can reduce the amount of time it takes to decide, which you can get by reducing the number of patterns and reducing the number of tradable symbols. If I can reduce the amount of time that it takes, and I can move my alert a little earlier, now when I get the alert and I can make a decision, I'm not chasing it, but I'm getting it at a more favorable level, maybe as it breaks Z1, and then decide at Z2 instead of letting it get past Z3 and say, God, I wish I'd taken that. The other way that you can do that too is when you're building out your your trade frames and you have multiple regions, you might say something like, well, my alert happened here, so I don't want to, I can't get this piece, but I still have these 3 different regions, and now that I know this thing is moving, I can now frame a more deliberate decision for these top 2 regions, and maybe I don't take those 2. So rather than chasing, it's one thing to make a deliberate decision on when to enter or not, but if you have framed that with the word chasing in your head, you already feel like you are reacting instead of acting, that this is not a planned behavior, that you're under some sense of urgency. And again, keep in mind, I'd rather be on the outside of a trade wishing I was in than on the inside wishing I was out. And when you chase, how many times do you then say pretty quickly, oh man, I don't want to be in this trade at all? So let's work on better framing, and then take a look at the alert process, and then some psychology in here and said, better to be outside wishing I was in than inside wishing I was out. Commit the Wu Wei exit, and you get enough symbols, the PSAR or the Wu Wei exit should resolve the trigger happy piece. If the trigger happy is your sniper, don't activate the sniper until you get to a level at which you really want to use them. Let the Wu Wei exit work its magic, and then you will find that you have a lot less emotional energy being drained, and then you can actually have a larger span of control. Here's what I would say is, if you have been letting them SSC entries that level out to an SQC, should I keep it in play and move the stop up to a Z3, or just exit after several bars? Well, you know how to re-enter. I would say start taking the exit sooner and just move on to the next subject instead of suffering through that. If you're not sure why you're in the trade, then get out of it. This is the eternal choice here between, the alternatives. When you're in that land in between the rivers, I would stay with the original trade until you're really sure that it's over. If you're thinking about entering a TZA trade, but you're in TNA, don't even consider the TZA trade until your exit for TNA is good. But if you feel like you want to get out of TNA so you can get into TZA, get out of TNA and then wait for 5 minutes and then see if it's still a good idea. So that transition from one to the other is one I would, that's where the lines start getting blurry. Positions in here, 91 trades in 4 days or 5 days. That's a lot of trades. Had some big wins and you were leveraging in it. That's good. 2.5 to 1 win rate to loss rate. So fewer trades is going to help with this SQN and the loss rate. I think you're probably hurrying up and getting into trades and wishing you're getting out. So scale it back a little bit and then see what that does to your numbers, and see if the ratio between wins and losses still is the same on a probability basis, and then on the average win versus average loss basis. Okay. But that's positive expectancy, and that ain't bad. And then I would study a little with care this region here. What were you doing here that was making a difference? And were you staying too long and chasing and not getting back to the zero state in that region? Because this feels materially different here than this. There were some substantive changes that happened in here, and we want to isolate those that are doing well. Right? Okay. So good work on that check-in. There's some actionable things to work on, and that's what he's prepared to be coached, is what I like to see on that. So thanks to Ken for sharing. Hopefully that helps. And I'm glad to see you're working with a couple pretty smart guys, and Glenn and Worth are going to be immensely helpful to you. Betty and Lisa are going to form a focus group and an accountability group. That is typically a precondition of success. I notice that people get a lot better when they pick a accountability partner that resonates with them, and then they commit to each other and they take over ownership of their own development. Glenn and Worth will attribute to that. The Euros will attest to that as well. So keep me posted on how that's going. Okay. Let's shift to some trade frames here. Oh. All right, so here's U.S. Steel. Okay, he's identified the yellow zone as the range of the day. I would like to be short if that breaks through that low of the day. Good first target here is the swing low at Z1. And then if it breaks below Z3, I would want to have at least 2 positions on that one. I think at $7 a share, I don't think I would try to get I wouldn't try to get too short in here. I think I would wait for the breakdown below 6. I like that one. I like waiting for the PSAR for the second one. Z3 is going to be nice. Yeah, and everything is a nice super pinch here. And one of the things that you wouldn't be surprised to see is that, this long period, when it broke out, it gave you this much, and that was about 75 cents of upside. So if this breaks out, getting to 8 is reasonable. So if you had something even as tight as a 25-cent management stop, like for position sizing, you could still have 3-to-1 on an expected gain of 75 cents. If it gets through that Z3, which really comes all the way back to here, then there's this big gap right here. And so if it can break through the Z3, it should get to 9.25 pretty fast. Like there's no resistance inside here. So when you make your normal play, up into here, that's where you're thinking it's going to oscillate. But if it breaks out of that, that's where you'd like to have two positions in hand, and then it should run to that pretty darn quick. In the same way that in 2 or 3 days, this thing moved from 9 to 11. It went from 9 to 11. So that's plus $2 in 3 days. So if you had something like a 25-cent risk, that would give you the potential for, 8R in 3 days. So U.S. Steel was tradable on that one. I think the explosive moves are more likely to the upside than the downside, to be honest. Intel still is locked in this tight range. It hasn't really broken out. So here's the gap. At about 53. And then this is about 57. So this $4 range inside here is like no man's land. So if you're getting long here at about 48.25, that move is about, call it $4.5 a potential gain. So you could have as wide a stop as $1.50 and still have 3 to 1. The last time it found support down here. So even if you used a wider stop like $1.50, you'd still be in good shape. Second position on this one. I think if you could get this first move to like 52, which is like plus $4, by this PSAR flip, I think that's where you want to be looking for a second position long. On the short side, it's been beaten down so much, I just don't think there's that much room in it to the downside. I think there's better things to be shorting than a great chip manufacturer in the tech sector. So I think I would be favoring just the long side and treat this as a value play. And again, your pair trade on this one is NVIDIA, which is winning the race, versus Intel, which is losing the race. But now it's down to the point where it's probably a value play, because NVIDIA might be already fully vested, if you will. Okay. TNA is just in great shape here. So this is the triple Russell. I think what I would suggest you take a look at, Ken, especially if you're looking at adding some swing. If you're gonna look at a swing on these things, there is some previous price levels that I would want to see on the chart. At least the price levels brought over, right? So that you get a sense of. Otherwise, this just feels like a runaway breakout to the upside, and it kind of is. I mean, that's the excess gains that it's made, and it closed really well Friday. That was where the strength was, not so much in tech, but in the broader Russell. So I don't mind this as a momentum play, but I do think that's probably at about 36 right there, maybe 37. So that's plus $3 on 35. So that's about an 8% move. Yeah, I don't think. I don't know where I would want to get a second position in. I think I'd have to wait to see greater than 38. And that's where going to see what the resistance levels are over here, not just the statistical measure of Z3, but I'd want to go see what's the actual $1.30 figure that people are watching. And this is kind of long in the tooth already. This is a really long PSAR move already. So if I didn't own any of this already, I think I would get this on a momentum play, but that's really a tactical play right now. And I'm just worried about U.S. index vulnerability to volatility shocks to the downside with the elections coming. And really, this one is a pure psychology play because no individual company in the Russell 2000 is pushing that around. So this is really much more having to do with the psychology of individual traders who are, who want broad exposure to growth and opportunity. And that's why they are actually more vulnerable to volatility events. So I like that this is taking off and leading the way, but that's all the more reason to be cautious on the vulnerability. Take your swing, take a shot at it, but I would emphasize the day trade more than the swing trade, because as you see, this has a lot of directionality intraday. UDOW is going to be kind of the same thing. I'm going to give you the same guidance on this one, and you notice that the last 3 days of breakouts was not as decisive and directional as UDOW, or as IWM, excuse me. So I still like it to the upside for all the same reasons, and then the same guidance about looking further to the west here to see what the price levels are and how close we are to absolute price levels that people want to lock in. Okay. Walmart. I love this one on a super pinch. Just remembered I could do that. So Walmart. Oops, yeah, Walmart is in this really tight pinch for like the last 6 or 7 days, with the exception of one upward spike, and then even the sell-off held at a slightly higher level. So it rejected the downside sell. It hasn't followed through on this one yet. And so this breakout would be above the dragon. You have a reasonable price target at the top of the river. So you're kind of, you're trading inside an SQC, but I think you would also find that that this is probably a Z3 pinch. And you notice the RL270 here, and the 90 and the 30 is here. So this is all within range. 134 ish, 135, and so that's like plus $5. So if you had something like $1 to $2 as your initial risk, you could do that as a swing. That would be the size of my swing stop. Trading to the downside, you're looking for 126. To me, there's better ways to play downside shocks. Like I would rather see I think TZA and FAZ, that's the finance sector, the triple finance, and even SDOW would be preferred rather than taking Walmart short. I just think you get a more reliable move here out of these symbols because you're going to get more downside momentum expressed. Okay. But I think it's a good trade. And I'd keep that at one position at least till it got above this one. So if this was just working, I would just keep it. And then this is where I would add the second position, I think, up here. Because it's such a narrow distance. And nobody but us knows that that PSAR dot's there, but everybody can see this support level. So I think I'd wait to see it clear, because that's just not enough room to give you a lot of money in hand. I would wait for this price level, a breakout above 135 for second position. Nikola Motors. Yeah, this is just all good. This one is beautiful. And I'm actually ready to swing trade this one. You have a really clear resistance level, which equates to the top of the dragon right there at about 55, and you're at 36. So that's like $18 to 54, which means that you could have a $6 risk on this, which would be down here by the PSAR. That's $6. So that's perfectly reasonable for a swing. I wouldn't even mind if you were here and just picked $3 and got twice the position size. And then this is the belly of the dragon is where I'd be short. And then I would add if it broke through the PSAR. I think if it broke above this gap at about 42, then it's going to make this move to 49, which is a $7 move. If it gets through here, that thing moves there pretty fast. And you can see the kind of rocket moves, large moves that this thing has from deep oversold positions. Yeah, so that was about -7. Yeah, it gets there pretty quick. So I really like Nikola Motors. Good frame. Worth swing trading. It's worth intraday trading too, to the long side. It could be hard to borrow shares on that one, but now that it's out of its lockup, I think we have found the support level at 30. Last one here is from Pavel. What's time frame is this one on? This looks like 30-minute charts. Maybe even 2 hourly. Oh, 8-hour charts. Okay, that's what that is. 8 hourly charts. All right, so he's on this trade here. He had crafted a yellow zone and then presumably played a breakout to the PSAR support, which was the previous PSAR support, and the last place that it took off was here, and it did that again, and so it got its measured move. Now from here, you would say this is a perfect critical state, because if this starts to fail here, you can see how easily it could come back to this price level or this price level. So that's tradable. But if it breaks out of here and it's above all of this crap, you can see how it gets up to the green line and up to this support level. And so that looks tradable. And if you had a small enough hybrid frog box or the MMRB, you can see that a move of this magnitude, which is about $4, gives you a nice 5-to-1 if you're using the hybrid frog, and probably 10-to-1 if you're using the MMRB. So Caterpillar to the upside, I think, is and the downside works. This is in a critical state, larger than normal probability of a stronger than normal move in a short period of time. So fits the criteria of a critical state altogether. So good looking frame. That one is well suited for core and turbo. All right, guys, good work tonight. That's everything I wanted to cover. I owe you some stuff, I think, on visualization and from the positive psychology courseware. And I'll get this video published, processed and published and posted to the to Patreon, and then into the Talent LMS course as well. Okay, so take good care. We'll be ready for tomorrow, and let's get a good night's sleep, be well hydrated, and let's crush it tomorrow.